Good morning. I'm Peter Milios from the Finance News Network. Stocks fell on Friday and finished lower for the week as Wall Street struggled to shake off fears that the Federal Reserve may start hiking rates later again this month. All three major averages capped a losing week. The S&P 500 dropped 1.16%, while the Nasdaq declined 0.92%. The Dow shed 1.96% for its worst weekly performance since March. Overall, the S&P 500 lost 0.29%, while the Nasdaq Composite dipped 0.13%. The Dow Jones Industrial Average dropped 0.55%. The Labor Department's June job reports showed payrolls increased less than expected, cooling down from May. Non-farm payrolls rose by 209,000, while the unemployment rate came in at 3.6%. Economists polled by Dow Jones had anticipated 240,000 positions added and a similar jobless level. But parts of the report, including stronger than expected wage numbers, heightened fears that the central bank may have the reason to resume hiking later this month. Average hourly earnings increased by 0.4% in June and 4.4% from a year ago. Meanwhile, the unemployment rate declined from 3.7% in May. Following Friday's big data release, traders kept their bets on a resumption in hiking later this month, pricing in a 92% chance of a quarter-point hike on July 26. Those are about the same odds as a day ago, according to CME Group's Fed Watch tool. Policymakers indicated at their June gathering that 2 more rate hikes could be ahead in 2023. In company news, Rivian Automotive surged over 14% as Wedbush raised its price target, implying a potential 39% rally. Levi Strauss shares dropped 7% after lowering its full-year profit forecast, while First Solar rose 3.3%, following a 5-year revolving line of credit and a $1 billion facility guarantee. In EV-related news, US electric vehicle sales reached 4 million by the end of June, driven by price cuts at Tesla and Ford, tax credits for consumers, and increased manufacturing capacity, according to Atlas Public Policy. Tesla dominates the market with a 61% share, while EVs still account for less than 10% of new vehicle sales, although rising sales are making them more mainstream. And oil prices rose for a second consecutive week as OPEC Plus supply cuts and increased demand led to higher prices in a bullish market, while Saudi Arabia's price increases and the search for alternative options caused Norway's North Sea crude price to surge, though global factors continue to impact oil futures. Overall, all US sectors were mixed on Friday. Energy was the best performer, largely due to the rise in oil prices, whilst consumer staples was the worst. The SPY futures are pointing to a 0.36% gain. Thank you for listening.